I think at some point Elon's going to either walk away or he's going to walk away and then negotiate a much better price. And once the deal closes, then I think the Twitter overhang goes away and people start focusing on Tesla fundamentals again, which are very strong. Correct. The valuation continues to move up. If you look at earnings revisions, they're up 12% year to date. People keep taking the estimates up. So from a valuation standpoint, the stock has not gone down. The price has gone down. And so we try to always focus on valuation. And when we look for companies, we want positive earnings revisions. I'm looking at by 2025, 2026, they're going to earn $60 a share. Put a 40 multiple on it. It's not going to trade at 100 multiple by then. That's $2,400. What is that worth today? It's worth about $1,500.
In this video, Tesla stock bounces hard, remaining more volatile than your ex-girlfriend. I'm just kidding. I know you've never had a girlfriend. And Tesla bull Gary Black explains why Tesla stock is worth $1,500 per share today, meaning it's literally half price. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Tesla stock today up a little more than 4.69% per share, just over $30 a share, closing at $658. Still, in my opinion, a ridiculous bargain. I honestly cannot believe. Approaching mid-2022, Tesla stock is in the $600 range. Seriously, market cap not even $700 billion. What the actual? Tesla strongly outperforming the overall markets today. Nasdaq 100 up a little over 1%. The ARK flagship ETF, which we discussed in a video yesterday, up almost 5%. Apple a mere 0.11%. Alphabet, Google's parent company, down marginally. Rivian up almost 3%. Lucid Motors up a little over 2%, and Amazon up over 2.5%. Of course, I don't have a crystal ball, but my expectations are for things to remain extremely volatile for the coming weeks, months, and possibly even quarters. From a personal point of view, the cheaper Tesla stock is, the better for me. I'm still accumulating. I'd love to see it in the $500 to $400 range. Good luck with that though. But I sincerely do hope, and I know hope is not a strategy, but I do hope that Tesla stock continues to get pummeled for a few more months so I can continue loading up. And now to some comments from long-term Tesla bull Gary Black, a man with a Wall Street background who for some strange reason actually seems to understand Tesla. You should all be following Gary Black over on Twitter. I think Gary's a great insight and a wonderful bridge between retail stock investors and Wall Street. Gary with a Wall Street background, able to provide a lot of perspective. What's Wall Street looking for? What is Wall Street thinking? How's Wall Street reacting to this news, and so on?
Tesla's had its own set of issues. It's down 40% since Elon decided he was going to go after Twitter, and the market's down. If you look at NASDAQ, it's down 15, 16% at that point. That's just a huge distraction for Tesla shareholders. It's a huge distraction. It's an overhang for Tesla stock. Our view is this gets resolved sooner than later. There's an annual meeting for Twitter today. I think at some point, Elon's going to either walk away or he's going to walk away and then negotiate a much better price.
Agreed. I think the last thing Elon wants to do is to start his own social media company to compete and then ultimately annihilate Twitter. He'd much rather follow through with this deal. But given the strange discrepancies between Twitter's claims of how many users are bots versus humans and the anecdotal experience of, I don't know, every single human on Twitter, it seems to suggest there's many more bots than Twitter claim, I think it's very likely that Elon will ultimately renegotiate the deal, a lower purchase price.
If he can negotiate a much better price, then that overhang that's on Tesla shares that he's going to have to sell more equity would go away if he can negotiate a price that's, say, $45 a share or even less. But he has to walk away, and he's used the excuse that all the bots are more than 5% of the MAUs, which, he's got some information. He's got Jack in his corner, former CEO of Twitter. While that may not be an MAE to get out of the deal, it is something he could use, and then Twitter would have to file a suit from in court to try to force him to close the deal. And Twitter's not going to want to tie up its business for the next 18 to 24 months fighting Elon in court, who doesn't settle. Elon goes to the end.
This is a great point from Gary Black. We all know Elon Musk has a pathological obsession with the truth and justice. The last thing Twitter wants to do is to end up fighting Elon Musk in court for a few years and then ultimately losing the case because Elon's team has proved beyond a shadow of a doubt the publicly stated figures from Twitter to the SEC suggesting that less than 5% of daily monetizable active users are bots, which clearly appears to be a steaming pile of bullshit. The last thing Twitter wants to do is to end up in court and then lose anyway, attempting in vain to enforce a $1 billion penalty if Elon walks from the deal. If Elon's team can demonstrate that Twitter have overstated the number of actual human beings on the website, everything about the deal changes and Elon is free to walk away without penalty. In short, Elon has Twitter bent over a barrel. No matter how things play out here, he has all the power in this negotiation. At this point, Twitter basically needs to just bend over and take it.
And I think that's too big of a price to pay for Twitter's business model to wait 18 to 24 months to get this going. So I think they ultimately settle. And once the deal closes, then I think the Twitter overhang goes away and people start focusing on Tesla fundamentals again, which are very strong.
This is another excellent point from Gary, and another reason why I mentioned earlier Gary's such a great bridge between retail investors and Wall Street. To me, it seems utterly absurd that there should be any overhang on Tesla's stock price while this deal remains up in the air. But Wall Street hates uncertainty. What Gary's suggesting here, as soon as the noise dies down around the potential Twitter deal, folks and the funds who for some strange reason seem to be almost universally suffering from shiny object syndrome, oh my god, a distraction, quick, there's uncertainty, sell all Tesla stock now. Once these folks regain their mental faculties and realize, wait, you mean the entire time while we were dumping stock and panicking because there was a little bit of uncertainty, Tesla continued to slate, continued to execute, continued to extend their lead, continued to drive their costs down, continued to sell every product they can make, continued to grow their brand awareness globally without spending a cent? You mean that entire time while the stock was collapsing and we sold and then it came down even more because of the noise, because of the shiny object we were looking at? You mean that entire time we were distracted from Tesla's fundamentals? Really? I guess we should buy a lot of Tesla stock now while it's gone up a lot because everyone else is buying it now. Aren't we smart? Yay, go Wall Street.
You've got 6.6% EV adoption going to 30 probably by 2025, 60 by 2030.
Way higher in my opinion. 60% by 2030. Now, admittedly, Gary in the past has said, look, my own EV adoption estimates may actually be a bit bearish. It could be faster. This is obviously an extremely conservative estimate. But I once again want to put this on the record. By 2030, there will be approximately 0 automotive manufacturers on planet Earth dumb enough to still be producing ICE vehicles expecting customers to buy them that haven't already gone bankrupt. Now, yes, there may be a few exceptions in the third world, but 60% of the new vehicle market being EVs, 2030, not even close. Try 80+%, maybe 90+%. Now, some people may argue, Stephen, aren't there issues with battery materials? There's not enough supply. That is true, and here's what happens if those supply challenges and bottlenecks aren't solved and alleviated. Consumers are still not going to want to buy more expensive, inferior, polluting, less safe ICE vehicles. They won't be buying them. It just means the global automotive market will contract dramatically and painfully for a few years until the supply chain challenges and material shortages can be resolved. ICE vehicle sales will collapse regardless of whether or not EV volumes can increase enough to fill the void. I cannot imagine any reasonable scenario in which just 60% of new vehicles sold globally in 2030 are electric. Maybe I have a lack of imagination. We'll find out in the better part of a decade's time. This video will still be around and my obnoxiously arrogant, overconfident prediction will still exist and we'll know how it panned out.
If you do that math and say, okay, what is that compound growth rate? That's about 50% per year as a tailwind. So all Tesla needs to do is keep its EV share. And there's a lot of competition coming in, as there always has been. But Tesla is very busy at trying to expand their TAM. They built a plant in Europe, so that lowers the price because they don't have to pay import tax. They're bringing Cybertruck out next year. By 2025, they'll have a $25,000 car. They have full self-driving, which will sell more Teslas. So I'm looking at by 2025, 2026, they're going to earn $60 a share.
Just a quick sanity check. My current base case, 2025, Tesla doing $56 in EPS. Gary around the $60 mark in 25 to 26. Again, this is my base case. And for the record, these are the latest updates from my currently in progress updates to my Tesla valuation model. Those will drop soon exclusively on Patreon. Check out the card in the corner or the link in the pinned comment to join. Point here, Gary and I surprisingly on a fairly similar page in terms of our mid-decade EPS estimates for Tesla. Of course, my bull case is about double that level, but that is my bull case.
Put a 40 multiple on it. It's not going to trade at 100 multiple by then. That's $2,400. What is that worth today? It's worth about $1,500. So,
and there you have it. Discounted back, Gary Black believes Tesla stock today worth $1,500 per share. And spoiler alert, Tesla is less than half that amount as I record this. So if you can read between the lines, hello. And if you can't read between the lines, my condolences for your illiteracy.
it's the largest position I've found. It hasn't worked for us this year at all, but I blame a lot of it on Twitter. He decided to get involved.
Hey, Gary, the thing though, this stock peaked out before Twitter. It peaked around same time valuations. It looks like valuations that peaked in November, and we've been consistently getting lower lows, lower highs. The chart for Tesla tells us this thing has been attached to the valuation peak in the market. Do we ever get valuations attached to this company the way they were when there was liquidity getting dumped on our heads during COVID? Just real quick, I mean, does I guess in your model, the valuation expectation is to still be lower, though?
No, I mean, don't confuse price with value.
I'm talking price to earnings valuation.
Correct. But valuation continues to move up. If you look at earnings revisions, they're up 12% year to date. People keep taking the estimates up. So from a valuation standpoint, the stock has not gone down. The price has gone down.
This is another fantastic point from Gary. While the price of Tesla stock may have come down significantly, I mean, like literally we're about half price at this point, the actual value of Tesla, the asset, the company, has continued to increase. Something that many investors in the stock market, especially the Wall Street folks, seem to be missing for some strange reason. Again, shiny object syndrome. Oh, look, oh my God, a distraction. Rather than, oh, they're still slaying it.
And so we try to always focus on valuation. And when we look for companies, we want positive earnings revisions. So while you're right, it's been lower lows, lower highs. That's price. But if you look at actually earnings, 2022 earnings, even though China shut down, 2023 earnings, just looking at sell-side estimates, not even our estimates, which are higher, they are up from where they were at the beginning of the year. They are up.
Right.
So from a valuation standpoint, valuation's actually better. Price is down.
Right. Valuations come down. Well, that's what I'm curious about, is because that's what happened in .com. As soon as all those companies started making money, that's when the stock went down. People bought them for a decade, expecting them to reach profitability. And then when they did, they went down 80-90% before they came back. Could we get a repeat in Tesla where it's locked in? It's a business here that is going to be around for years, but the price of the stock keeps going down. That's what happened with .com.
Okay, but you're confusing price with value. Okay, price is going down, the value is going up. If you look at the free cash flow.
Are you saying value or valuation, Gary? I'm talking about price to earnings, right? It's come down for Tesla, has it not? Valuation?
Price to earnings has come down as price has come down. But E has not come down. They had a blowout first quarter. I mean, they just blew away the numbers.
Yeah, for sure.
Up 7-8%. But because of the Fed aggressiveness at pushing rates up, and it's just math, it's the denominator, you got to discount those earnings at a higher ratio. That's what has brought the PE down. And I would argue the Twitter distraction has brought it down further. I think the Twitter distraction will go away. And if the Fed does as we think it will, which is going to say, look, we've pushed this too far, we're going to go into recession if we don't, at least slow the tightening down. I think at some point this year, and it might be July or August, Tesla fundamentals will ring through, and the denominator issue will go away.
So I think what Gary may have been suggesting there is sometime around mid-year, when some of this noise abates, there is a relatively strong probability that Tesla stock will moon in a relatively short period of time back to where it should have been had there not been this noise and distraction.
The other thing I would add about Tesla, they've pretty much announced the stock split. They will be sending out their proxy for their annual meeting sometime in mid-June for the August meeting for a stock split. Remember what happened the last time Tesla split the stock? It went up 80% in 20 days.
I'll be paying very close attention to what happens to Tesla stock in the wake of their announcement, shareholder vote, and then ultimate approval of a stock split. As Gary pointed out last time, Tesla stock up about 80%, although I think there were a few factors there. It wasn't just the stock split, but ultimately a stock split will be a very bullish sign for the company. And more importantly, the cheaper the price of Tesla stock is, the cheaper options contracts are, which means Tesla stock could become even more volatile as a result of this. At this point in time, stock options aren't within reach of most investors, just those with relatively deep pockets. But if we get a 5-for-1, 10-for-1, or 20-to-1 stock split, all bets are off. Actually, all bets are on, because options are bets. See what I did there? Okay, let's move on.
Right now, I get your point. It's fair that it's lower lows, lower highs. But from a fundamental standpoint, the numbers are still very strong because the earnings are still positively being revised upward.
For sure.
That's important.
Yeah, okay. All right. Just want to make sure that is the right description, because it's an interesting one where the profitability and the earnings go up, but the price and the valuation goes down.
So I think we're all on the same page here. Tesla's fundamentals have increased significantly while Tesla's stock price has been cut in half. This totally makes sense. There's absolutely no opportunity here whatsoever. The stock market is always right, and I for one expect Tesla's stock price to remain permanently detached from Tesla's ever-improving fundamentals. So let me know in the comments below if anyone's been picking up Tesla stock sub 1,000. sub 900, sub 800, sub $700 per share? I most definitely have. Well, was until I ran out of money and then spent some money that I didn't really even have, and then had even less than zero money, and then dropped even further, and then I bought even more, and then better stop talking before I incriminate myself. You never know who's watching. So, hope you guys and girls have enjoyed this video. It's always great to hear from Gary Black, one of the smartest Tesla bulls out there, and as I mentioned, a wonderful bridge between retail stock investors and the Wall Street mindset. The question I'd like to ask you guys and girls, please let me know in the comments below. When Tesla stock was in the $600 range in May 2022, what were you doing? And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment. In addition to gaining up-to-date access to my Tesla stock price targets out till 2032, you'll also be able to access and participate in regular Q&As on just about every topic you can imagine. And speaking of, submissions have just opened up for the latest exclusive Q&A, so don't forget to submit your questions over on Patreon. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.